Do you expect global banking regulation to continue tightening over the next few years? And if so, how significantly do you expect the bank's profitability to be affected?
Well, I think that it will get tougher. There will be more regulation imposed on the financial sector, and I will say that the financial sector has asked for it themselves by the misbehaving they have done through the last financial crisis. So I'm not surprised that there are tougher regulations, and I expect that that will continue. And of course, it will have an effect on the profitability for the financial sector. For Handelsbanken, we always measure ourselves relative to the sector and not in absolute terms. And the new regulations will, of course, account for all the participants on the market. So the lead we have in profitability will remain the same lead with or without new regulations. So for us, it will remain the same relative to the peers.
It will continue. We're already seeing new regulations down the road. In the Philippines, the regulators have been very active in implementing in the Philippines all those regulations and trends which are being adopted worldwide, and that means that there will be, and that will cost money. But on the positive side, all these things like enhanced risk management, enhanced operations risk management, cybersecurity, and all of that stuff, if properly implemented and embraced, will result in less credit losses down the road, better operations results, lower costs. The only problem is you invest first before you reap it. And that's why I said we're in a great position because our incomes are strong at the time wherein we have to make these investments.
Well, unfortunately, the regulators are still really following international standards. In a way, this is good because it makes it easier to compare banks. And if investors want, they will be able to say, oh, that is a better bank, is a more stronger bank than the other. But as I said, sometimes this is a wrong approach to this. But all in all, since we have to comply, of course, it is going to affect the bank in large. With us, we know that we are a little bit cushioned by the fact that, as I said, we are rating. We have a lot of international investors who know us and who can, if we wanted today to raise capital by private placement, we can do it very quickly because it's a strong bank. But the problem is that at the smaller, as I said, there's a proliferation of smaller banks, institutions that have no access to international finance. They have no access even to domestic financing, and they are not yet making money. If you tighten the regulation and if you maintain the regulation and you don't give them a moratorium periods which are long and which is not also accepted to some of us, say, okay, why should I comply? Others is not complying. We give them advantage, no point. So they will have to merge. They will have to be acquired. So in a way, that's the case. But compliance is always a very cost-intensive issue, and I think that somehow the profitability of the bank will be affected. But as I said, the strategy that we have will ensure that it's not declining, but maybe it could be more, but it will probably not grow faster than we think.